asked me to speak today. I've worked with Melanie and Carrie mostly at ATKG, and I've worked with, I hope I haven't seen any of you in an adverse relationship. The reason they asked me to speak is I worked for IRS for 31 years. I went to work there planning to stay 2 years, and life happened, and I ended up 31 years later retiring. I've been on my own for 5 years, and I'm an enrolled agent, and what that means is the Internal Revenue Service has licensed me to practice before them and represent people before them. And since all of the people in San Antonio used to work for me, it's been kind of handy that I have changed the sides of the table. Unfortunately, they have hired a few new ones, but so far so good. And not too many of them are too unhappy with me. I have a degree in accounting from East Texas State University that's now a Texas A&M affiliate. So if I'm talking to folks from Texas, I went to East Texas State, and if I'm talking to people from A&M, I went to A&M. So I hope to keep everybody happy with that. I did grow up on a farm in North Texas. Greenville, Texas is my home, and my dad farmed about 400 acres of cotton primarily, and he raised cattle for our own consumption and to fill those money holes in the winter when we weren't growing something that we could sell. And we, raised hogs, did all of that. So if anybody needs help driving a tractor, I can do it. So my dad was the original equal opportunity employer. My 3 brothers got bigger jobs. I was big enough to take the job. I got the job. So I know how to milk the cows and everything else. That's worked very well for my career with IRS, because when I went to work for IRS, I was 24 years old in Houston, Texas. And the first farm audit I did, my manager said, does anybody know anything about farms? And I kind of raised my hand, and he said, okay. And he didn't really believe me, but he said, okay. And so it gave me an audit in El Campo, Texas, which is southwest from Houston. So I called up the CPA, and the CPA did everything wrong, in my opinion, about how to work with IRS, because he started off saying, basically, you can't do that. And of course, when you tell IRS that, they tend to respond in a similar manner. So he told me I couldn't see the farm. He told me I couldn't meet the farmer, and I couldn't do anything but come to his office. And back then, IRS was actually had a little more power than they do today. And I said, oh yes, I can. And so I did. Well, we met in the CPA's office, and I asked questions like, where is your bank account, and how many children do you have, and where do you, what kind of business do you have going on, and so forth. And I said, now I want to see the ranch and the farm. It was really just a farm. And he said, oh, that's a total waste of time. You're just here on a boondoggle. You don't know what you're doing. Just really was giving me a hard time. And I said, I want to see the farm. And so the farmer and his wife said, well, we'll show her the farm. And the CPA said, all right, go, but I'm not going to waste my time. Big mistake. Big mistake. We go get in the farmer's truck, and we head out to the farm. And my first question, I remember it like it was yesterday, was, so do you grow short staple or long staple cotton here? And what have you got in the silo over here? And where's that piece of equipment on your tax return? And it didn't say anything about cattle on your tax return. And look at those little oil pumps going out there. I didn't see that on your tax return. And that guy rued the day, let me tell you. And, as an IRS person, I was doing my job. And the CPA was not doing his job. He should never have let me get that rancher farmer alone. And as my biggest piece of advice to you, I'll say it first and I'll say it last, is if IRS calls you, and which they're likely to do, You know, as the supervisor of all the people here, I constantly said, forget sending a letter. Call them, go see them, call them. They don't have to send you a letter as the first contact. And if you can get somebody on the phone that's proud of what they do, which most farmers and ranchers are, and you say, well, why don't you tell me a little bit about your business? You will tell something you shouldn't have told before the phone is ever put back down. So my first and last piece of advice is, IRS calls you, you say, call my representative at ATKG. Call anybody but me. So you don't, I can't, you know, I didn't feel bad about what I ended up doing to that poor farmer. And I heard the CPA on the phone calling another CPA saying, you better look out for this Susan Graham woman, she's their farm ringer. So it was ugly because there was a significant amount of unreported income and unreported expenses too, as it turned out, because the CPA had never been to the farm and really didn't have any idea what they did for a living. The big thing you have to worry about if you are a gentleman or gentlewoman farmer, in other words, it's not your number one source of income, is whether it is a business or not. Now, I'm sure Melanie or others are going to talk a little bit more about this, but if farming is not your primary source of income, farming and ranching is not your primary source of income, it's a whole nother issue. So if you make your living based on the weather and the bugs and the health of your animals, then this is not for you. But if you make your living doing something else and you have a ranch or a farm on the side, then you need to worry about some of these questions that I put up here. Is it your primary source of income? In my father's case, it was our only source of income. My father sold cotton, he raised wheat, he raised corn. Primarily he used it for feed for the cattle, but as a little girl, I used to remember that my mother and my father would cover the dining table up with paper about 1 week every year, and then they would fight back and forth. And I was very young as I remember this. My father unfortunately passed away when I was 15, so I had been a kid. And they would fight, and then my mother would cry. And I never knew what was going on, really, except you didn't want to go in the dining room that week. Well, come to find out, my mother told me later, after I'd taken a job with Internal Revenue Service, that was the week they did the tax return. And it seems that my father regularly did the tax return correctly the first time, and then he would decide he sold less bales of cotton or less cattle or whatever until he got it down to what he thought it ought to be. So I know that the day I went to work for IRS, my father was spinning somewhere, as were several of my brothers. Anyway, that's off the point. If it's your livelihood, great. However, I audited somebody one day. Actually, I supervised the audit of a giant ranch. They had thousands and thousands of acres in Texas. They had acres in Colorado. They had acres in some in Arizona. Wasn't very profitable, but they had a huge ranching activity. And we went forward at IRS with it as a hobby loss. Their sales alone for 1 year's tax returns over $2 million. And you'd think when it's that big that it couldn't possibly be construed that it was a hobby instead of a business. Well, their salaries for that $2 million in gross profit, the salaries was $3 million. And what it really was, in my IRS opinion, was that the man who was behind it all, the money man that had it all, this was his fun. This was his hobby. He had other people running it. He had other people doing it, but he was losing big money, spending big money. It was not his main source of income, and we went after him as a hobby. So it doesn't matter if you're really big or really small. One of the first things that's going to come into any IRS person's mind is this legitimate ranching activity? Especially if you have a loss. Well, anybody that really does much ranching and farming is going to have a loss most of the time, or at least pretty often, especially if you're dependent on weather, prices, commodity prices, everything else. And, because of the equipment depreciation and so forth, it may not be an economic loss, but it might be a tax loss. So that's very important. How much time do you devote to your business? Assuming your farm and ranch is a business, you need to keep up with how much time you spend on it. In this particular audit of this big one that I was talking about, the man actually tried to convince me that he spent 3 hours getting ready for a phone call that took him an hour, and then it took him 2 more hours to decompress from the phone call. So he was trying to claim 6 hours a day on the ranching activity. We didn't buy it. Do you have a business plan for your activity? That's very important if it's not your major business. If it's a sideline business, it's very important whether you have a business plan. These questions come from the IRS. There are 9 factors in determining whether somebody has a hobby or a business. These are all part of those questions. If you hire somebody that has expertise, then that is in your favor. If you're audited, or especially if you're audited and IRS says it's a hobby and they deny your losses and you go to appeals, I can tell you for a fact that appeals will take the 9 factors and will say, IRS wins number 1, taxpayer wins number 2, IRS wins number 3, etc. And they will go through the list and they will write up their report that way. And at the end of the report, if they say IRS won 5 out of 9, you lose. These 9 factors, if you read what it says in the IRS publications, they say, oh, no one factor weighs more than another and it's not that big a deal and this is just a guideline, et cetera, et cetera. But I can't tell you how many IRS reports I have seen that came down to the end and said, well, the taxpayer only won 3 out of 9, so it has to be a hobby. So that's very important that if your business is a sideline business, it may be a business, but if it's not your primary business, you really need to go through that with your tax preparer. In one case, many years ago, before I went to work for IRS, I was going to college and I was working in a real estate business, and the man decided that he was going to become a rancher. Well, he was the kind of person who knew nothing about ranching. And this was in Rockwall, Texas, and he had bought a piece of land in Terrell, Texas. So if anybody in here has ever been in North Texas, I'm sure you think I might have a little bit of an accent, but the people from Terrell, Texas really have an accent. And he hired this ranch manager, and he bought a bunch of Simmental cattle, and this was in 1975 or so. Simmental cattle were the new thing. They were going to make everybody rich. It was almost a tax shelter. I know he paid like $40,000 for the bull that he bought, and he was buying half-breed Simmentals, 3/4, because they were just building the breed. Anyway, he didn't know anything about it. I grew up on a farm. He figures that out. He has me keeping all of his breeding records. He also ends up building a show barn so he can sell his cattle, and he dyes the sawdust green. He's really impressive with his showmanship, but he doesn't know anything about cattle. So one day I said, how's the cattle business today, and he said, well, it's bad. He said, we've got a disease in our cattle. And I said, oh, you do? And he said, yeah, they got scars. And I said, all your cattle have scars? And he said, no, it's just the calves, but we got scars. And I said, I never heard of such a thing. I said, we had a calf barn with no eyes one time. It was blind. We raised it on a nipple bucket and, raised this cow, actually, it was a heifer, raised her up. But I never heard of scars being a disease. And I finally said, would you write that down for me so I can look it up? Of course, we didn't have the internet back then. And so he wrote down S-C-O-U-R-S, scours. Those of you that have any cattle might know what scours is, but for the rest of you, it's basically diarrhea. So we had this disease, and I said, oh, okay, I got it now. Anyway, it was a disaster. His business partner was a businessman from Dallas. He was a real estate agent. They didn't know anything about cattle. They would have been prime for an IRS audit. As far as I know, they didn't have one. His only big move was he hired an expert to be his ranch manager. One of the 9 factors is, are you getting expert advice? Are you getting good advice? Do you have a business plan? We had a breeding plan. We had an expert that was actually tending the cattle, and he had a virtual expert keeping up with his breeding records, and it didn't really matter that he didn't know anything. He was basically just the money. So that's another 9 factors. Anyway, those are very important. If you were to get a call from IRS and you were told that they wanted to come audit you, I put this book together because, and it's double-sided printed, this would be what I would tell you to read first if you were going to try to represent yourself. And it's small print, too. The last 100 or so pages is the audit technique guide for farms and ranches that IRS publishes. They have an audit technique guide for many industries, but if you were to be audited, Chapter 8, for example, is on livestock marketing and auction barns. So you really are not, I don't care who you are, if you are the proprietor of a farm and ranch, you're not prepared to represent yourself. So that's my number 1 advice, is don't do that. I just had a new client came to me yesterday, referred to me by Elizabeth Copeland, and he said, I did the tax return myself on TurboTax, and I went to and had an audit with an office auditor here, and he seemed like a real nice guy. And he said, we started out in 2010, and before you knew it, we were all the way through 12, and I didn't even know what was happening. And guess what? They denied everything they could find to deny, and they didn't allow what few things he did have in his favor. I worked an audit here in town with an office auditor, and the CPA who had done the tax return, it was a real estate agent, the CPA that had done the tax return had left some things off. And I called the CPA, and I said, why did you leave these items off? And he said, I thought her loss was big enough. And I said, well, it's always easier to come to the middle if you have a better place to start. And I said, if you had put everything on there, then I could have come to the middle. But I basically audited her records, and I went into the audit with a bunch of adjustments in her favor. One of them was even a transposition error. And they had merely transposed numbers when they went from the books to the tax return. So it was clearly a mistake and in her favor. And the IRS person said, we're not in the business of giving refunds. I'm not giving you anything in their favor. Well, she did know who she was talking to, but that was a big mistake on her part. And the client did end up getting a refund. But it was, if the client had gone by herself, she would have been toast. So my number 1 piece of advice when you're dealing with IRS is never handle it yourself, and never you should never be interviewed if at all possible. What I do when I represent somebody, they have a provision in the IRS handbook that if the representative can't answer the questions, they have a right to interview the person. Well, what I do is I do one heck of an interview on my person before I ever talk to the IRS. And then I should be able to answer every question. So again, if in the audit techniques guide, it tells the revenue agent what questions to ask. So for any of you that are with ATKG and you haven't done this in industry, there's about 20, 30 of these audit technique guides. If you ever represent somebody, you need to read the audit technique guide before you get ready for that audit. I don't care if you feel like a chicken. Don't feel like a hawk. IRS is not out there to play games. If you get to the point where you're getting an IRS audit, you have to remember that you're one of the elite, less than half of 1% that gets audited nationwide. So a computer has said you need auditing. A person has said you need auditing. A manager has said you need auditing. By the time a tax return gets to a person to do the audit, they are real sure that there's something on that tax return that's wrong. Because as territory manager over all those employees, I used to say, you must do a pre-audit analysis. You must figure out if there's going to be a return on the investment of your time and our expenses to put you out there to do that audit. So there's very, very few times when an IRS audit is done for information. There are times when they do that, but it's very seldom. So if they're coming for you, they think they've got a reason to come for you. And, do you get no changes sometimes? Yes, you do. I'll never forget, I audited somebody because on their other deductions, they had Christmas $50,000. And I said, all right, I'm going after Christmas $50,000. And of course, you're supposed to go ahead and pick out all those other things that look like they might be suspect. And then there's certain things that an IRS audit are mandatory. For example, if you have any kind of inventory, you got mandatory audit of the inventory. So I'm out there, but I'm out there primarily for Christmas. So in my initial interview, I said, what's this about Christmas on your $50,000? And you have to remember this was back in the 80s, so it's a lot more money than it is now. And they said, oh, we forgot to type bonuses. They would not have been audited if they had remembered to type bonuses. Fortunately for them, I was the kind of auditor that said, okay, I don't see anything else here that really needs to do it. I'm going back to the office. So I closed the case. But there's one guy in town, and I know Melanie and Carrie know who he is, and Elizabeth knows who he is. If he's your auditor, it doesn't matter what you say or what you do, he's going to be there for a year. And I'm sorry to say, I'm the one that hired him. I'm also sorry to say I promoted him. But I want you to take it easy on the management because it's really hard from your somewhat lofty position to know what the reality is out on your audit. And even looking at their work papers and so forth, it's very hard to know how bad he really is. But I've made quite a lot of money off of him now. So, as I've helped Elizabeth with a case, and I've helped ATKG with a case, and I've helped another CPA firm in town with a case, and I've had one of my own. And he has done a horrible job, and he's really, really easy to beat in appeals. So, I wish him all the best. But from your point of view, look out, because it's going to be miserable. So, number one thing, what should you do when the IRS calls? Do not tell them anything other than who you want them to call and what their phone number is, or tell them, I'll have to get back to you. But don't chat. That's the worst thing you could do is to chat. And then what you do when you get selected is, again, get somebody that's knowledgeable about not only you, but about representing you before IRS to help you with that audit. Thank you very much.